this video, I'm going to share with you guys how to use Orderflow footprint charts in order to trade hidden gaps. You might say, well, Mike, what are you talking about hidden gaps? How often do they occur? They occur multiple times throughout the day. And if you're not using footprint charts, you're not going to be able to see the type of gaps I'm about to show you in this video. Now, before we talk about the gaps here in a moment, you got to understand what a footprint chart is. You'll see all these numbers within each one of these 5-minute periods of time. And the numbers on the left-hand side represent the bid. The numbers on the right-hand side represent the orders that were executed on the ask. And I want you guys to have this ingrained in your head. Orders that are executed on the ask are essentially aggressive buy orders. Orders that are executed on the bid will be what we refer to as aggressive sellers in the market. And if you look at this chart right here and we compare it against a normal 5-minute chart, we're going to see some very distinct differences. Now, we can also see the yellow numbers like we have right here. This represents the point of control. This is the exact price within this 5-minute period that had the most amount of volume traded at it. If you look on the histogram on the right side of the footprint chart, we can also see where it's yellow. This is what's going to show us where the point of control is a little bit easier. So if you have a hard time seeing the yellow within the numbers, looking on the right-hand side will give us a big clue. Now, when we look at what a gap is in the footprint chart. Now, if you're not yet subscribed to the channel, hit the subscribe button down below and give the video a big thumbs up. Now, I want to make you guys aware, we're going to be doing another cash giveaway prize this week. Last week, Dan was a winner. I've already sent him his money via PayPal. If you want a chance to enter the cash giveaway for next week, make sure you like all the videos, leave a comment on all the videos, and make sure you're signed up to the email list down below. So if you're the lucky winner, I have a way to send you your money. So as we come over and take a look at what a gap is, first, you need to look at the center of the candle and notice if it's green, like we have this green box right here in the middle, this is exactly a bullish candle, meaning price opened at the bottom of the green area, close at the upper part. So we have a little bit of a wick and a little bit of a wick on the bottom as well. And think about this as a 940 candle. We come over here and we look at the 940 candle. What do we see? A little bit of a wick above us and a wick below us as well. Then we want to see the point of control either above or below the candle body. Now, the next candle at 945, we have that very thing. We can see the bottom of this candle really stops right here, and we have at least one price level before the point of control. So what is this telling me? This is telling me we have a gap, and we are likely going to see prices go ahead and move up higher. If the point of control would have been above the top of the candle body, then I would have been looking for prices to go lower. Now, I don't care about the color of the candle. I don't care if it was actually an up candle or a down candle in this scenario. Now, the way I would enter this as I'd simply go ahead and enter the market as soon as the market opened, then look to add right here at the point of control. Then in this example, target 1 comes in at the top of the candle. So for this one, we don't have a big target, and you can actually see the stop loss would have been quite large. However, if you're trading this with multiple contracts, then we can essentially try to trail the second target. One of the ways that we could do this is simply wait for a candle to close below the point of control from the prior candle. So in this example, you could have got out way over here, or you could have used some other trailing technique. Now, when we look at the next example, you can see right here at 1025, we have a gap between the point of control and where the candle closed. Now, what would we expect? We'd expect the market to go lower. Well, what happened? The market goes up. Well, you know what? That's trading. Not every trade is going to work out. So you would have entered one market right here where we opened. The second would have been added at the point of control, and then they both would have been stopped out right above the top of the candle. But one thing that you can also, play in terms of, do you want to Now, one of the filters that you could use in terms of trading this strategy would be, you know what? If the reward to risk ratio just simply doesn't match up, I simply don't take the trade. Look at the next trade example. The very next candle, we have another gap scenario, and we would have entered right here where the market opened. We would have looked to add right here. However, we come right down here and only target one was filled. We never made it up quite high enough to fill the next target. But then we look at the very next example right up here. We have another example, and look at this, right? You would get in right when the next candle opens. You would look to add right over here, which would have been filled over here. Then you could have cleaned up your targets right down here. Now, this is an example where the reward risk ratio would make sense because we close right here, and our stop loss on the first target would have been about 2 points. Our stop loss on the second target would have been roughly 1 point. So we'd have 3 points of risk total in this trade. And if you actually look from here down towards the bottom of the candle on that second target or the second entry, we would have had a reward of 5.5 points. From entry number 1, we could have made 4.5 points. So if you look at this, if we're wrong, we would lose 3 points. If we're right, we're essentially going to make 10 points. And that's how you get very favorable reward to risk ratio trades. So one of the ways that you can filter out your trades is, make sure there's enough meat on the trade in order for it to make sense, because we are going to have losing trades. But as you can see, we can find very favorable reward to risk scenarios. Now, let's go ahead and trade this in market replay so you guys can see how this is actually going to unfold as the market is moving. So now I went ahead and loaded up NinjaTrader playback feature, and we're actually going to go back and trade this in history. Now, the best thing about NinjaTrader playback feature is when the market is closed on the weekends, whatever the case may be, we can go back and work on our skill set as a trader. Now, what I'm going to go ahead and do now is we can see I'm going to go ahead and hit play, and within playback, we should be able to enter orders. Now I'm going to go ahead and hit play. As soon as this candle is closed, I'm going to go ahead and I'm going to pause the tape, and then we're going to go ahead and we're going to enter the market. Right here, we see the market right there plotted a new candle. So we're expecting the market to go lower. So now I'm simply going to go ahead and sell market. I'm going to place my target right here at the bottom of the candle. I'm going to place my stop loss 1 tick above the high of the candle. And I'm going to go ahead and I'm going to put a limit order right here where the point of control is. Now I'm going to go ahead, I'm going to speed this up a little bit so that we can get through this. And we're going to just see how this trade actually works out. We're going to let it play out. I don't know how long this is going to take. We'll speed this up a little bit more. Either we'll get stopped out or it's going to come down and hit our target. Now, this is the last example I showed you guys a few moments ago. So we're actually going to see this trade actually work in our favor, but it's still good to see, how the trade is going to work. So we have an inside candle right here. We try to rally down or we try to sell off to the downside. And then I think we're going to go ahead and push up here in just a moment, or at least so I think. All right, now there we go. I sped it up a little bit more. All right, now our second target has been filled. All right, so what I'm going to do with this stop loss, I'm going to move it right where it needs to go. I'm going to move the take profit right here at the target 1 location, and look at our risk to reward ratio on this trade. All right, look how little the risk is as opposed to how much we could potentially make on this trade. Let's go ahead. We're going to map this out real quick. We're going to measure right up here to our stop loss. We got about 1.5 points of risk, and we have the potential of about 5 points. Now, obviously this is going to be per contract, but let's go ahead and let this play out. Let's see, how much money we actually make on this trade example moving forward. We can see we just hit our target. Boom, we were filled on that trade. We can see that trade was good for $500 on the S&P. That is a great trade. And if we come back over here and we look on the 5-minute chart, we're going to go back and look right here on the 1050 candle. On the 5-minute chart, do you guys see any type of gap that could have alerted us that, hey, we need to be looking for the sell side of the market and exactly where we need to add into this trade? I think we both know the answer. The answer is no. This is something you can only see within using the footprint chart. If you want to see another order flow footprint chart strategy and how to set up the footprint charts on your own charts, you want to watch this video right here.